Hello traders, the title of the video is how to use multiple authentication to find a high probability trade. Alright, so if we are day trading or swing trading or position trading, the first thing that we want to find is a high probability trading setup. In this tutorial, I will show you how one can use multiple authentication to find a high probability trade. Right? So, I have one example here, very simple example that I want to show you. So, we can use the price structure to find high probability trading setup. We can use technical indicator like the CCI, the stochastic, the RSI, the relative strength index indicator, or we can use the Fibonacci pattern, the Elliott wave pattern, and the volume bar. We can combine different trading tools to identify a high probability trading setup. But very often, when traders are looking for high probability trading setup, they use only what are called one authentication. Okay, what is one authentication? Is to use one good reason alone why one want to buy or sell a financial instrument. All right. So, for instance, here you can see that the CCI period 14 is exhibiting a double bottom chart pattern. That's a bullish trading setup. So by only using that double bottom CCI pattern to identify a trading setup is just like using one authentication only. Instead of using one authentication, we can use multiple authentication to validate the trading setup or to find a high probability trading setup. Okay, so here we have a double bottom CCI, which is a bullish chart pattern, also near the zero line. Okay, all right. So we say, all right. So we want to buy. We are here now. We are here. Let me put a spot there. All right. So double bottom. Somebody stopping only on the CCI will say that this is a bullish trading setup. All right. But you want to go a little bit deeper, which means you want to validate or authenticate that is truly a high probability trading setup. Therefore, you want to use another authentication, find another good reason why it is a high probability trading setup. So the first reason that one may find is that the CCI period 14 is above the zero line and is now exhibiting a double bottom chart pattern. But somebody who wants to use a double authentication may say, all right, price breaks above the prior high, which is this one here. This is the prior high, and is retesting the prior high. That's a bullish trading setup. So if we combine the double bottom CCI and the price breaks in above a prior high and retesting it, that's a double authentication. So we are now finding two good reasons why we should look for an opportunity to buy here. Another thing that we can add is the price breaks above the prior high, retests it, and also is pulling back near the rising moving average 14. So we can say another good reason is that the price deviates from the moving average 14 after breaking above the prior high. Now is pulling back to retest the rising moving average 14. So now we have three good reasons why we may consider this as a high probability trading setup. First good reason, CCI form a double bottom chart pattern above the zero line. Second good reason, the price breaks above a prior high, retested here. A third good reason, price deviates from the rising moving at 14 is now retesting it. So now we are using not one authentication, we are using multiple authentication to find a high probability trading setup. We can go a little bit deeper again. So for the same trading setup, we can also look down and use the volume bar because the volume. So if one stop here using the moving averages and the CCI, one is only using the momentum oscillator. As I explained to traders when we are trading stock or any financial instrument, it's not sufficient to use the momentum indicator alone because the momentum is all about the rate of change of the price or the speed of the price. Now, to use another authentication, we can use the fuel In this case, when I'm talking about the fuel, we are talking about the trading volume. We can add another authentication, which means we have a surge in trading volume at the time when the price pull back to retest, prior high. At the time when the price is retesting that rise in moving averages, at the time when the CCI is forming a double bottom chart pattern, we'll also have an increase or a surge in trading volume or a volume spike. So as you can see here, we have 4 authentication. CCI exhibits a double bottom above the zero line. Price breaks above the prior high, retesting that prior high. Price deviate from the rising moving at 14 and retesting it. That's the third authentication. And the fourth authentication, we have a surge in trading volume or a volume spike. So what I'm doing here, I'm trying to encourage traders when they are looking for high probability trading setup to use multiple authentication instead of one single authentication by using various authentication. One is likely to pinpoint the best high probability trading setup. So do not use one good reason alone, use many good reasons why it is a high probability trading setup. Sometimes if you have only one authentication and you look carefully, checking other technical indicator or the volume bar, you may notice that though one may have one good reason to buy it, another verification will confirm that it's not that good reason why one should buy. Suppose, you were here and you see that the price pull back to retest, this support level, and you go to the higher time frame. You go to the higher time frame and you notice that it's just a rally. This move from here to here is just a rally retesting the edge of a declining channel. So that's another authentication on a higher time frame, which means validation of the trading setup on a higher time frame. Though if the CCI form a double bottom chart pattern, that's one authentication. If one push it a little bit further, try to verify on a higher time frame if everything is aligned very well, and one notices that in fact this move from here to here is just a rally to retest the declining channel, one will be very careful to buy after the pullback here, but one will prefer instead to buy above that declining channel. So try to use multiple authentication, multiple verification, multiple validation to authenticate or to certify that one is dealing with a high probability trading setup. So the shout out today, my friend, is that do not use a single authentication to find high probability trading setup. Use various authentication to ascertain that you are truly in face of a valid, high probability trading setup. This will help you to find the best trading setup that will generate solid trading signal, and you will find a low risk entry point to trade it more profitably. Have I brainwashed you today? All right. This is the end of the tutorial. All right. So if you have any question or suggestion, put in the comment section. And of course, I will be recording another video to answer your specific question. As you can see in this case, it was a good reason, and the price, breaks above that bearish trend line, a final support, and continue to go up. But you will be safer to buy above the trend line right here instead of here. Use multiple authentication to find high probability trading setup. If this video has been useful to you, let us know by giving us the thumbs up. If you think that this is another blah blah blah, alright, please let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use multiple authentications to find a high probability trade. Happy trading to you all and speak to you soon.